All righty. Well, let's get started. Thank you so much for joining today. As you probably could tell, I have a little cold and I'm trying to fight through that. But you know what? The show never stops, so I have to keep going. But again, I appreciate you guys joining today. Today, we're going to be talking about Section 179 and some more IRS and tax codes and CPA things today that it goes over my head sometimes, but I've got the specialists on here. But we're going to be talking about how your business can buy new technology at a fraction of its cost. So today, my name is Will Nobles. I'm the founder and CEO of Vector Choice, and we've got James Marosek, CPA from WMBO CPA Group. And James has been a good dear friend of mine for several years, and he definitely knows what he's talking about when it comes to the IRS tax codes and everything. But before we get started here, I want to just tell you a little bit about, if you're not familiar with Vector Choice. Vector Choice is a IT consulting managed services company out of Atlanta, Georgia. We have multiple locations in the Southeast, from DC to North Carolina, Alabama, and Louisiana. And so we've been honored to get several awards, MSP 501, which is the top 501 MSPs in the country. And then this year has been even awesome year. We've nominated for MSP 501 as top MSPs again in the country, and then the Inc. 5000 as well, with some other awards. What does Vector Choice do? We do outsourced IT managed services, cybersecurity, hardware and software procurement. So yes, you can buy the hardware that James is going to talk about that you're going to be saving money on. You could buy that from us. And then also we do VoIP hosting, any kind of compliancy. We're partnered with Office 365 and do a lot of IT consulting type work. Where we do it at? So we, like I said, we have offices in Atlanta, Newbern, North Carolina, Washington, D.C., Baton Rouge, Louisiana, and Mobile, Alabama, and was serving clients in about 23 additional states. And we've done several international projects and work in Costa Rica, the UK, Netherlands, and the DR. So I'm going to stop, and that's my PowerPoint. That was the end of it. No, I'm just kidding. That is the end of the PowerPoint, but I wanted to bring on Mr. James. James, appreciate you being on. Can you tell us a little bit about yourself?
Yeah. My name is James Marosek. I'm a CPA. I'm a partner at WMBO CPA Group in Duluth, Georgia, and I specialize in small business. I also help with exit planning. And what I do is I'm a consultant who also does taxes. So I really help business owners understand their taxes, understand how to do things to minimize taxes, and just be smart. Be smart with your money and have a good strategy.
Yep. And James, we've got several people all over the different states that's on now. Do you only do work in the state of Georgia, or do you do work outside the state of Georgia?
I do work all over the country.
Okay. Mm-hmm. All right. Good deal. So what, the past 2 years with the 2020 and COVID and lockdowns has been crazy. And then 2021 has been probably equally as crazy. What has some of the tax changes that have been made over the past that people might have not had talked to their CPA or aware of? What's some of the things that have changed over the past 2 years?
One of the biggest changes, you're talking about depreciation, is that there's now 100% bonus depreciation. So any assets that have a class life of 20 years or less, you can take 100% depreciation. And that includes leasehold improvements and the equipment that we're talking about now. There's been PPP money that businesses have received that's not taxable. There's been also other help through payroll deductions. As far as what's going on now, there's been a lot of rumors about tax rates going up, corporate rates going up. It looks like a lot more of the worst things that we've heard are going by the wayside. So, overall, I'm just advising my clients. I'm expecting some changes. I'm expecting rates to go up, but at this point, I really expect it to be mild.
Okay, good. As a business owner, it's good for me to hear that as well. So I'm sure a lot of the business owners on this call definitely love that sound. So hopefully that comes out to be true. So let's talk about section IRS code section 179. What is that? Explain that to us.
So Code Section 179 allows a business owner to basically write off an asset. So you buy a computer for, say, $10,000 or computer equipment for $10,000, and under the regular depreciation convention, it would be depreciated over a 5-year period. The Section 179 allows the business owner to write it off immediately.
And guys, if anybody has any questions on Facebook or in the webinar here, please put it in chat or the Q&A section, and we will definitely answer those. Well, I'm going to say we, but James will answer those questions for you. So James, what are types of items? I know you said servers and computers, but what other types of items can you deduct with 179?
Really think of property. Property that lasts 20 years or less. You think about, desks, really any tangible item, that your business would need can all be written off using Section 179. And also, I have to stress, it can also be written off with bonus depreciation, that you buy $10,000 worth of computer equipment with the current bonus depreciation, you also get the full write-off. It's important to note that the state of Georgia does not follow the IRS rules when it comes to bonus depreciation, and they still require you to write that depreciation off over 5 years. And many other states don't necessarily follow the IRS either. So it's important to discuss with your tax advisor whether it makes sense to elect the Section 179 depreciation or take the bonus depreciation. And just to make a point clear, Section 179 is an election that's made versus bonus depreciation, which you take it. You take bonus depreciation unless you either elect Section 179 or elect out of the bonus depreciation.
Okay, all right. That's like me talking technology to you and ones and zeros. How does one know to determine, like myself, would I go to a CPA to say, okay, do I do 179 or do I do the bonus appreciation? I mean, which way do you know the best way to go?
It really depends on your facts and circumstances. And so what I would look at for you, and one thing I didn't mention, is that with bonus depreciation, it can actually cause your business to have a loss. Section 179 is not allowed. Once your taxable income goes to zero, that carries forward. So in your case, you may be the owner of several businesses, or you may have numerous capital gains or other investment income. And I may prefer for you that we take the bonus depreciation, because the loss can really help you save some taxes now versus the Section 179 carry forward, which would help you in the future.
Okay. And can you expense vehicles with 179?
You can, and also the bonus depreciation applies. There's special rules for passenger vehicles, which a passenger vehicle is basically any vehicle under 6,000 pounds. Those have a limitation. The first year, the maximum you can depreciate is $18,100. That's much better than what the old rules were for a passenger auto. So the 179 doesn't help you get around those rules. The bonus depreciation does help you a little bit on this. But I will say that if you buy a vehicle that's greater than 6,000 pounds, a truck, not considered a passenger automobile, you can write off that vehicle 100% the first year that you put it in service. It's important to note that if you do this strategy, the vehicle must be used 50% for business or more, and it shouldn't go below that threshold.
Okay, all right. And how about if I buy something, I do the deduction, but then I turn around and sell it? Maybe I buy company cars and I turn around the next year and sell that. Is there any penalties for that?
That's an excellent point. And that's something that I'll talk to my clients with as well. when considering bonus depreciation versus Section 179, that there is something, it's called Section 179 Recapture. And so, yes, if you take Section 179 on an asset and either shut down your business or sell it before its normal depreciation period, there's a recapture, versus if you take the bonus depreciation, it's fully depreciated. The tax treatment is different, and the Section 179 in that case could be less advantageous. So I don't recommend it if you know that you're going to not hold that asset for the full depreciation period.
Okay, all right. And can you use Section 179 every year? Is it just a yearly thing? But can you do it every year?
Yes, you can use it every year.
Okay. And so I always see a rush at the end of the year, especially November, December, being in the IT side. A lot of people want to, and the non-technical CPA people say off their money to hide from taxes. And, is that normal to see people start buying a lot of technology in November, December to clear some cash off their books?
It is. Year-end planning, it can go both ways. In a year where a company has done really well, my advice to clients is always to make strategic purchases, to look at things that you would do anyways. And so if you're planning a big technology upgrade and you've had a good year and, we could save some taxes, my advice would be, if you're going to spend the money, let's spend it now rather than wait until 2022, where it'll be another year before you realize the tax benefit of making the purchase.
Okay. All right. And what is not eligible with 179? Anything that you cannot use?
The big thing is property. If you buy a house or a building, Section 179 doesn't apply to that. But basically, when you look at tangible items, any business equipment, any personal property versus real property, that is all eligible for 179.
Okay. And how does one code that in, let's say, QuickBooks? And how would they code it to at the end of the year? Let's say, for example, if I go buy office furniture for my office, how would my accounting people code that in QuickBooks to make sure that I do get that deduction at the end of the year when we're talking to our CPA firm?
When I look, my advice to my clients is to capitalize everything. So equipment, even though you hear that, hey, if I buy this equipment, I can write it off. There's a way that it has to be done, and that it still has to be capitalized as equipment on your balance sheet. You can't directly write it off to the profit and loss statement, because the CPA does need to know that you purchased these assets, and on the tax return, they have to reflect that you've capitalized it and you're taking either depreciation or you're taking 179.
Okay. All right. And James, we got a question. Does it matter what type of business entity, S Corp, C Corp, LLC, to use Section 179?
It does not. What's important to know is that the deduction, unless it's a C corporation, the deduction is actually taken at a personal level. For example, if you're an S corporation shareholder and you get a K1, and let's say you had $100,000 of income before a $100,000 deduction for a Section 179 write-off, your K1 would read $100,000 of income, but then there's also a deduction, and the two would offset each other on the tax return, versus if you took a bonus depreciation, your K1 would simply read $0 of income.
Okay. All right. So what else? And I'm trying to ask questions that I've ran across or that I've experienced. But what others can you share with Section 179 that I haven't asked so far?
Boy, I think you've covered it. I think you've covered it pretty good.
Okay.
I mentioned that Section 179 is taken at a personal level, and so it's important for the CPA to understand the client and understand what else is happening with the client. When you look at people that are single business owners, it's pretty cut and dry what you want to do and whether or not you want to take that deduction. But if you look at a person who owns multiple entities, or a person who might have a lot of real estate rental property and they're getting other K1s, it is important to know what's going on with all of these entities to see how the Section 179 deductions work in conjunction with all of their investments and business activities.
Okay. All right. Great. So we've talked a lot about 179. What are other things that going into ending 2021 year and filing taxes in 2022, because I can't believe we're already talking about 2022. It's coming very quickly. But what are some things that a company can prep for, for filing taxes for this year?
The important thing, this time of year is to really have your financial statements up to date. I start asking my clients, okay, we know how you've done through October, but how does it look through the end of the year? And really try to get an accurate number for what they have. Look at other opportunities, look at retirement, make sure that they're properly funding retirement. Anybody that has an HSA, a health savings account, I want to make sure that they fully fund that. That's a great tax deduction because you get a tax deduction when the money goes in and then it comes out tax free. So you never pay tax on that money. And I also want an understanding of what's going to happen in 2022, because, as far as being aggressive with tax deductions, that may not be a great idea if 2022 is even going to be better than 2021 and they may be in a higher tax bracket. So, being able to look at a 2-year period can really help, as to a strategy for the current year.
Okay. All right. Well, James, and I wanted this webinar to be short and sweet, I think, because we're covering a very niche topic here. But what other recommendations or anything that you advise your clients, going into and dealing with taxes for the year?
The important thing with my clients is, where are you headed? Where are you in life? The prescription is going to be different. For a young person who's making, a good way of living, putting money away, if you have children, putting money away for college, putting money away for retirement, really getting young people to put money away and not spend it, build up a war chest for the future. For clients more towards the end, really start thinking about how they want to get out of their business. Do they want to sell it? Do they want to bring in family? Also looking at their retirement, if they're deficient, really trying to push them in those final years to put more money into retirement. So it really depends on where the client is in life. But it's always looking at, 5 years and further in life. How can we help you now do the smart things to help you, manage your taxes now and also set you up for success in the future?
And I'm sure you deal with a lot of that.
Yes, because, business owners are always, they want to do their business and they're really not looking at those things. They may not be looking at the tax implications of their decisions. And so I always want the client to do what is going to be in concert with what they feel comfortable doing. But I do want to make them aware of areas where I think they might be lacking and make sure that they're doing the right things to set them up for a successful future.
Okay, great. Well, James, thank you so much for coming on today. Thanks for educating us on Section 179. If you guys, if anybody on this call or webinar is interested in buying hardware and software, I'm going to throw my contact information up here. We can definitely help. And anybody that's on this call, we're giving a discount for purchasing equipment through us through the end of the year. And with that discount, and I hope in using 179 or the bonus option, we can save you a little bit of money before the end of the year. But James, and then if anybody's interested in speaking with James as well, reach out to me and I will make sure I can get you James's contact information. He is a wealth of knowledge and has helped me quite a bit over the years as well. Well, James, appreciate it. Thank you so much for coming on. And
You're welcome.
I hope everybody has a wonderful rest of the weekend.